Today is day 2 of Federal Reserve Chairman Jay Powell's testimony on Capitol Hill and his annual Humphrey Hawkins testimony. Today, he'll be in front of the House Financial Services Committee. Yesterday, in front of the Senate Banking Committee. He flat out admitted inflation began well before Putin invaded Ukraine. He also raised the issue of a recession, saying that it will be tough, a challenge to raise rates without taking the U.S. economy into a recession. Here's what he said about that soft landing. Stay with us. Watch.
It is going to be very challenging. It has been made significantly more challenging by the events of the last few months.
Joining me right now is the former Council of Economic Advisors Chairman and the Hoover Institution Distinguished Visiting Fellow, Kevin Hassett. Kevin, it's great to see you. What was your takeaway from day one of Powell?
Right. I think that Jay actually was doing a good job. It's kind of like in the NBA Finals. It seemed like the Celtics had a terrible first quarter, and then they came out and had a great second quarter. Well, Jay had a good second quarter after a terrible first quarter. He spoke frankly about what the nation's problems are. He conceded that, a recession is, he didn't say inevitable, but it's quite likely. I think it's almost for sure we're in that now. You and I should talk about the claims because they're consistent with the view that we're headed towards recession. But he basically made sense and spoke rationally about an economy where most of our policymakers have been in denial about it, for almost a year. And so I think it's a positive sign that finally the Fed's going to take action to move us in the right direction.
Markets knew it, right? The NASDAQ is down 30% year to date. Markets have been expecting a recession. We got the initial jobless claims out this morning, 229,000 actual jobless claims versus an estimate of 227,000. What did the claims tell you this morning, Kevin?
Right. Well, what's going to happen when we get into recession, or since we're in recession, I have a strong view on this, then what happens is the claims climb to about 250,000 a month from around 200,000 a month. And when they blipped up into the 220s, of course, the president and his allies are all saying it's transitory. I think, Maria, you might have heard that word before. But now we're basically locking in, maybe about 2/3 of the way towards the recessionary number. And I think that march to recession in the claims data is probably sure to continue. I also had to make a comment on the previous discussion about oil and how it's Putin's price hike. It's such an irrational point, but this is the thing that puts it in perspective for me, Maria. The Russian oil sales haven't really gone down. They're selling them to China and to India, but the price of oil is higher, so their total revenues from oil have gone up. So they have this thing in their mind that, all of the Russian oil has gone to zero, and that's why the price is higher. But that's just a lie. That's just a lie. Global supply can't keep up with global demand, and in the U.S. it's worse than everywhere else because they shut down pipelines. But it's not that Putin's offline. It's just that Putin's selling to China and India instead, and so the global supply isn't really much affected.
So the global supply is not much affected. What is going to come out of this meeting today with the oil CEOs? The president has been slamming the oil companies over how much money they make, and yet he's missing the meeting. It'll be Jennifer Granholm leading the meeting in the White House today of oil CEOs.
Yeah, it's unbelievable that you would have a meeting at the White House with the companies that make the most important product in America right now and have the president not meet with them. Clearly what they've decided to do is demonize these guys. You've seen the rhetoric come out of the White House, how despicable it is. We're in a democracy. If you've got free companies out there providing product that consumers like, then the White House shouldn't be threatening them with the sword of Damocles, and that's what Biden's doing. And so the fact that he's not going to the meeting means that he's probably going to give a speech after the meeting talking about how, they all should burn in hell or something, right? He's declared verbal war against the oil companies, and he's sending his deputies to talk to them. That's, a terribly Machiavellian move, and it really bodes ill for, getting more oil to come. Because if you got a president that hates you, then why would you, increase capacity in that country that's run by a president who hates you? You just wouldn't.
Well, it's also a whole of government approach. Virtually every agency has the climate change agenda as their priority. Look at the Securities and Exchange Commission coming out with new rules for all companies to follow. Right. This has created new costs for companies on the heels of an already, a heavy inflationary burden of more than 10% on the producer level in terms of inflation.
Yeah, because if they've got a green agenda that you have to follow, otherwise they're going to, have the central bank say that you're a risky firm because of climate change, then you're going to be doing stuff that you weren't doing when you were profit maximizing. And so if you add, extra costs to someone who's profit maximizing, their profits are going to go down, and companies like that are going to flee the country and go do their business somewhere else. We're seeing that very clearly in the data. After the Trump tax cuts, multinationals started to move a lot of their activity back to the U.S. Now in Joe Biden's America, everybody's fleeing the country, and that's one reason why supply in the U.S. is, the supply problems are worse than pretty much anywhere in the country.
Kevin, real quick, how long is this going to last? What is your take in terms of where this is going? Larry Summers obviously recently said that it would take 5 years of unemployment at 5% to reestablish price stability. How long are you expecting this inflationary problem to last? And what will a recession mean to us, practically speaking? A lot of job cuts? What?
Right. I think a recession will be a lot of job cuts, very slow growth, and high inflation. I think that we can end inflation quickly if we have a fiscal response to do that. At National Review this morning, folks could click over there. I wrote an article about how to fix inflation, and I designed a fiscal policy which will make inflation go away relatively quickly. The Democrats don't have the nerve or the will to do it, but if there's a change in Congress, then maybe even next year, fiscal policy could help the Fed get there faster than what Larry Summers wrote about.
Yeah, I assume that means no more spending, forget the Build Back Better agenda, forget about forgiving student loan debt, and all of this additional stimulus that this president continues to push, even in the face of 40-year high inflation.
Yeah, or to repeat what you said just before I came on, you got to cut demand, increase supply, and there are really well-known, well-established ways to do both. And I write about it in National Review this morning. It's pretty simple to get ahead of the curve on inflation, and it's really awful that this administration is just in denial about the problems. They won't speak frankly about why we're here. They blame Putin instead of supply and demand.
Kevin, thanks very much. Kevin Hassett joining us this morning.